Welcome to the Sales Train with Rashaun Page. I got an email from a guy named Chris from Toledo, Ohio, and his email reads, Hi Rashaun, just wanted your opinion on something. I'm considering signing up with an IMO for a guaranteed issue product, and they only offering 55% on the product. Is that too low of an offer for me to accept? Hey Chris out of Toledo, anytime you're dealing with guaranteed issue policies, the commissions are much smaller because now the insurance carrier is taking more risk. So they're not offering the bigger commissions like on a traditional whole life where there's some form of underwriting. Anytime I've seen contracts with companies that's as small as 25% on guaranteed issue products, on guaranteed whole life products. So 55% may be a solid number. That may be all that they can offer. That may actually be high end because, as I said before, I've seen as small as 25% on graded policies or guaranteed issue policies because, like I said, the insurance carrier is taking more risk when they're just issuing policies without any form of underwriting, even though the clause to the waiting period clause may be attached to the policy, it's still more risk involved. I mean, because sometimes you may have a person on life support and the family just will leave them there until the waiting period expires. So that's something that insurance carrier has to take into consideration when issuing a policy with no form of underwriting. So on the flip side of that, the agents or the general agents or the IMOs or NMOs, they have to take a cut to be able to offer those products because, I mean, if they were to give all the money to us as the sales guys, then they will probably it'd be a lose-lose situation. They give us all of the commissions and also give the client the total face amount or whatever after their waiting period expires. So back to your question, Chris, 55% may not be a bad thing on a guaranteed issue product. I mean, one thing you can be confident in knowing is you're going to get these products in and out. The commissions are going to be fast and there's no underwriting. So that 55% can actually work even though it may seem a little smaller in comparison to your traditional whole life policies. Now you're able to issue these policies much faster because there's no underwriting involved. So I think you should go forward with it. It's not a bad thing. I'm glad you called in to ask for emailed in to ask for my opinion. Anybody else have any questions, or if you have any further questions, feel free to email me at rpage@rashaunpage.com. That's RPAGE at rashaunpage.com. See you soon.